It's a measure of just how crankily despondent Tokyo brokers have become when a $50 billion quarterly loss by the world's biggest pension fund makes the world seem rosy. The Government Pension Investment Fund dropped its red ink grenade last Friday evening, stabbing an accusatory finger around the world to explain a 2.25 trillion and 2.4 trillion yen valuation loss in respectively domestic and foreign equities. For the brokers, desperate for a bullish line and watching through the increasingly distorted prism of the GPIF and Bank of Japan's combined 39 trillion yen ownership of the Japanese stock market, loss spells upside. The GPIF's figures for the end of June showed its holdings of domestic and foreign stocks at about 21% apiece of the overall portfolio. The fund's target for both is 25%. Simple, said the brokers, producing their back-of-the-envelope calculations. The GPIF's current position is about 5 trillion yen underweight Japanese equities, and the rebalancing spree could begin any moment now. The fact that the fund will be buying foreign bonds and equities at the same time is even better, say the Forex strategists, because it puts a natural ceiling on the yen's rise against the dollar. The more breathless proponents of this thesis even predict that rarest of joys, upward price squeezes as foreigners come back into a market where the GPIF and BOJ have both absorbed liquidity and are still buying like crazy. Setting aside the background weirdness of a situation where the government in one form or another is now the largest shareholder in a quarter of Tokyo first section stocks, the bull story still requires a huge leap of faith. Japanese shares will only truly rally when the foreigners return from their now prolonged absence as net buyers. The theory that the GPIF and BOJ can lure them back is tempting but not compelling. Japan is attractive, generally speaking, to two types of outsider: macro funds who have fallen for a big picture narrative like Abenomics, or value investors entranced by underpriced quality. The problem, though, is that between the GPIF and BOJ's mega purchases, the market is losing its power to price either narrative or value. Sometimes a $50 billion loss really is bad news.